Hi, hello, good evening, friends. Welcome everyone to Invest10, India's largest retail investors online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul, and also the host for your today's program. It's a great pleasure to invite every one of you to the first edition of Invest10, the most influential stock investor conference of the year. I'm sure by the end of this program, you will have extensive knowledge on various investing principles to make better decisions. Let me thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website, who helped us to reach a wider audience in a short span of time. Also, I would like to appreciate our title sponsor Sher Khan, one of the leading stock brokers in India with millions of investors as their customers. They operate as a brokerage firm. They offer online security brokerage, portfolio management services to institutions, large corporate houses, and individual investors. They serve customers across the country from the past 37 years. The speaker for today is Mr. Devang Jhaveri from Mumbai. He is a chartered accountant by profession, co-founder of Dravyaniti Consulting, spent 25 years in the financial markets. He was heading the technology, trading technology and risk at RBS Edelweiss and Rabobank. His interest with markets dates back to 3 decades. I thought you were a very young man, Devang.
Not
So
really.
he uses quantitative techniques and combines fundamentals with technicals to identify and hold potential alpha generating stocks and get rid of underperforming stocks. For a smooth journey from micro cap to small cap to mid caps. Mr. Devang, it's a great pleasure to have you on board today. We look forward for a very interesting session. On behalf of Traders Gurukul, Money Control Pro, Sher Khan, I extend my warm welcome into this program as an elite speaker. Go ahead, sir. The stage is yours.
Thank you, Ashok, for such a nice introduction. Thank you, Traders Gurukul, Sher Khan, Money Control Pro, and Investin. Yeah, thanks for having me on the show, and I hope I'll do justice to what you want to showcase to your viewers. So, hi everyone, and hope you're having a great day. Um, Hope you're not tired anymore. I'll take you through this 2 hours and tell you a lot about my investing journey and my style of investing. Just to start, I am, as Ashok already mentioned, I'm a chartered accountant, but I never practiced chartered accountancy. I was always into technology, and I was always fond of markets because of my legacy, and
Great.
I mixed
So you
both
come
of these
from a
together.
family of market technicians?
Not really. My father was a jobber, so he used to go to the
Ah,
ring,
wow, wow, wow. That's
and
a that
so
definitely a family of great legacy. By the way, quick for flaw I found in your story, session number 5 today. Murphy's Law.
okay,
No worries. Go ahead.
yeah. So yeah, so this is session number 5. So I guess I put it wrong, is what you're
Yeah.
saying?
Yes,
Okay,
yes, yes.
that's okay.
No
Anyway, so
worries.
yeah, that's my journey, and I'm very passionate about investing, as well as trading, but I do more of investing because investing is where the bulk of money is made. It's made handsomely, and yeah, it requires a lot of character to be an investor. Obviously, it requires as much character to be a trader, but investment is also not as easy. Obviously, you can put in your money with great managers which are there. But yeah, investing is definitely an art, a science, as well as uh, math. So there are a lot of things together which make a good fund manager, a good investor. So let's begin. Today, I'm going to talk about quantitative investing using fundamentals and technicals. Now, frankly speaking, if I really have to tell you, anything which is fundamentally good will be shown on the charts, right? Isn't it? I mean, why do you really need fundamentals? I mean, there's no need for fundamentals. Technicals chart is going to show you the prices, pers persisting rising prices, uh, prices which don't give up, they stay on and on, are actually telling you that okay, just invest in these stocks. It's a good stock to invest because the chart is going to tell you. However, the issue is that we have 6,000 stocks, and I mean, what to invest in? I mean, if you go for NSE 100, they're already kind of mid caps, which are already, up by say 5x, 6x before they come to a mid category of a mid cap stock. So good stock when it comes to mid cap, it has already grown a lot. Then you come to small caps, it's the same story. It's already moved a lot before it actually made it to a small cap. So you need to identify stock at a nascent stage. Okay. So the reason I do fundamentals is for two reasons. First, it helps me identify stock at a very nascent stage because your x's multiply like 1x to 10x, 20x, 30x is all done when you buy the stock very cheap. When it's just started, when you invest in a college going student saying that this guy is going to become a CEO, you see, if you are investing in his career, I mean, he's growing how many X's, till his career reaches to become a CEO. Similarly, you identify stock when the stock is young, that will give you a lot many X's, the multiplier, the multi-bagger that we are looking for. So we have to look a little early. And not necessarily all the multi-baggers have to come from, you know, micro caps, because that's not possible as well. I mean, more than often the micro caps fail you. However, some of the micro caps that you'll run will will run a long way, and that will become futuristic heroes, and that's where you'll get the big money from. I'll give you a few example of my own selves. I have identified companies like Honeywell Automation at 700, 750 rupees. It's trading at 40,000 bucks. I mean, all of this is using what I'm going to show you. So let's get on. So initially, identify your universe. I mean, universe identification is very important. So for two reasons, I do fundamental. First, I said you can actually get the stock at a very nascent stage, at a very early stage. Second, you have a better risk management. Risk management is you won't get stocks which are really getting played on by some speculators or people who are running the company using a lot of money. What do they call them? People who yeah. So we don't get into such stocks. We want to get stocks which are really really good and neat. So these are the two reasons I do fundamentals. Otherwise, technicals are sufficient to make money. So identifying your stock universe, every strategy works on some universe or the other, or some phase of the market. So every stock works, but I need to make sure that I know what I am actually doing. So that's why, one second. So technicals help us ride momentum, but can we run the momentum on any stock? Do you want to run the momentum in Unitech, Syntex, Vakrangi? I mean, all of these, do you really want it to run on a Vakrangi, which made like from 20 rupees, it went all the way to 550 rupees and back to 20 rupees, or a Syntax again, which had a similar story, or a Unitech, which had a similar story? Do you want to run technicals on that, or you want to keep away from such stocks? I mean, if you want to keep away from such stocks, identify your universe. Just a second. Use fundamentals to filter out growth stocks efficient resource utilizing stocks at a nascent stage before the larger trading community gets into it. I mean, that's what I meant. Before the larger trading community gets to notice it and gets to play around with it. Once the larger trading community gets to play around with it, sometimes the stock doesn't perform for a long, long time. Okay, and then again, because of the performance, it gets pushed again. So you want to identify the stock much before everyone gets into it. Okay, increase the probability of laying your hand into a multi-bagger stock. So one thing I'm going to be very clear: everything I do is very probabilistic, or everything any fund manager or anyone does in the stock market is a probabilistic thing. As in, we are trying to do is increase our probability of a good winner. That's all the focus is. So no one is sure what's going to happen. I mean, I'm not sure whether my current portfolio has any multi-bagger or not. I'm not sure what's going to pan out from I'm even sure even Rakesh Jhunjhunwala didn't know that his Titan is going to be these many X's when he just bought it. He didn't know about Chris Hill will be going. Obviously, he had conviction, but he wasn't very sure at that point in time when he bought it. But he knew that the probability of this becoming a multi-bagger is very high. So anyone who invests, all they're investing in is a possibility in the probability of that stock performing well. So every time I invest, I'm investing in the possibility of probability of that stock performing well. And I have certain pointers, I have certain data which tells me that the probability is high. As soon as the data goes against, I just have to get rid of it. Ensure you are out of a stock if weakness persists. So yeah, if I get my data tells me that boss, this is not working, get out of it. Money flow into the stock recedes. So who am I to tell, okay, this is going to run? If I am if I've done all my research very well, and I'm very confident, and I sit on a stock for ages, but the stock is not moving, isn't it isn't it foolish? Because I'm getting my money stuck, my capital stuck for a long time without much returns. So the best policy is to see where the money flow, when the money is flowing into my stocks. If the money is flowing, get into the stock. If money is not flowing, don't be persistent. Just get out of the stock. That's what you want to do, and that's why technicals help me with weakness, money flow part of the exits. That's when the technicals help me. I may know that I like this stock, but when to enter, when to exit, when to let go is what the technicals are going to help me. So that's what I do. Run a rule-based technical systems on fundamentally filtered universe to enter potential multi-bagger and ride the investment for a longer time. That's exactly what I do. Run a rule-based technical system. The system that I'm going to show you is a rule-based technical system on fundamentally filtered universe. So I know I'm what my technicals are based on. I mean, I don't want to run technicals on all 6,000 companies. I just know what I really like and want to enter potential multi-baggers. These are all potential multi-baggers. And then most of them don't pan out to be, okay? And ride the investment for a longer time. This is what I do. Now let's get to the fundamentals. So there are 7 strong fundamental filters that I use. So build your tower on a strong base. So I create a base of filtered fundamental stocks, and that help me to run my technical rules on. Okay. So let's get into the base criteria. So my very basic criteria for all that I do is the debt equity. Okay. So my first basic criteria is I want a certain amount of debt equity. Okay. If the debt equity is above 2, 2.5, I don't want such stocks. Okay. Because they are not very well managed. It just tells me that the company is not very well managed if the debt equity goes about a certain ratio. Pledge percentage. And the pledge percentage is if the promoters have pledged their stocks, okay, beyond a certain threshold. I generally like to keep around 10. So if the pledged percentage is above 10, I get uncomfortable because that means the promoter is always under certain pressure, and that pressure is going to affect performance of the company, his own performance. Somewhere or the other, something is going wrong. That's why he has to pledge more and more. And generally, I've noticed that whenever the pledge percentage goes about 20, starts going about 20, it keeps on going on and on. And at some point in time, the prices crash. So I want to get rid of pledged promoters who are pledging more. Third is promoter holding. Okay. I want a certain level of promoter holding to be there so that the promoters are interested in the company. However, I'm marked an asterisk if you see. Asterisk is for companies like Infosys, Larsen. They don't have promoters who have more than kind of the kind of I expect like at least a 40% promoter holding. There, the promoter holding is much lesser. So you can include them in a different way into your query so that you don't, get a very, very filtered universe. I mean, you may want to include those companies which are good, but their promoter holding is less. And market cap. Now, market cap is also a very, very important criteria because anything below 300, 500 crores, I don't look at. I mean, at least it has to reach somewhere to be able to, because companies which are very small, even a smaller risk can wipe out the company. So it has to reach to a level where it can sustain, even if it gets into a big risk, it can sustain itself. I mean, one big risk comes to a smaller company, the whole company's existence becomes an issue. So you need a market cap filter to make sure that the company is sustained on certain market cap for a while. So this is base criteria. Everything I built is on this base criteria, the 7 fundamental filters. Now, one thing I need to tell you that I believe that I don't want to create a universe which is like best in everything. I don't believe that. When I analyze fundamentals, I want to have universe with different perspectives. So I have 7 perspectives, and I use these 7 perspectives to get my filtered data and make